Problem. How you doing?
Pretty good. How about yourself?
Doing pretty good, man. Doing pretty good. So you're in Cleveland, huh? Is that where you're at?
Yep, right now living in Cleveland.
Awesome. Well, maybe your weather is a little shittier than ours. I don't know. Pretty shitty here today.
It's always shitty here.
All right. Well, hey, thanks for jumping on. So let me try to find. Tell me a little bit about yourself. Thanks a bunch for making the time to meet with me today. I'll try to find your resume here and just tell me a little bit about yourself.
Yep. So I went to John Carroll, still here in Cleveland. Was there, went for finance, econ, and studied stats as well. Played on the tennis team there. Originally wasn't looking at real estate. I was going to go more of a corporate finance route. Senior year, ended up taking a couple of real estate classes and got exposed that way. And so first job out of college, I figured might as well dive into it. Went to Marcus & Millichap. Worked on the retail team there.
Okay.
I was hiring at the time. Wasn't my first choice, but I'll take a job at that point coming out of college.
Yeah.
From there, was working a couple of deals for Stark at the time after a couple months, and they had an analyst opening. And so they reached out, see, they were aware of my work, and so they figured might as well. Ended up making the jump a little sooner than I expected to development, but for the past, I want to say, year and a half, I've been at Stark. I don't know how acquainted you are with us, but we're a fully integrated developer. We do have an acquisitions platform, but primarily focusing on development. We do everything from retail to hotels, student housing, and then our biggest focus, I'd say the last year or so, is multifamily, whether it's traditional multifamily or the build-to-rent product.
Oh, okay. How big is Stark? I don't even know. For some reason, I don't know those guys.
I want to say about $3 billion in assets under management.
Wow.
Yeah.
Where's? I guess I should look them up. Where's most of their? What's their asset mix?
So they are a family office that started, I want to say, 70s ish. And the guy that started it was originally just doing, single tenant net lease retail deals across Cleveland. The legend goes that he was doing it while in law school. I'm not entirely sure how accurate that is, but that's what he likes to go with. And then from there, we do a couple pretty big mix of mostly retail, but they also did some multifamily going back in the 90s and early 2000s, and then a couple of bigger multifamily projects recently. Every once in a while, like the hotel and student housing was a bit one-off deals. Like we have an office tower in New York City, which we have zero interest in doing office in general. It's a good deal's a good deal, so might as well do it. But
did you guys? I'm the only. I was looking in here. The one in Columbus. Did you guys develop the shops at Stone Creek and in Gahanna, or was that a buy after it was developed? Do you know?
I believe that was just an acquisition. I could be wrong about that.
Yeah, I would say I think my one of my JV partners might have built that. That's what I think.
Yeah.
Oh no, so that's shops at Stone Creek. Sorry, that's a different one. I was thinking something else. Okay.
Yeah, if you look on the website, I'm not sure it's entirely up to date, but
okay.
Hopefully.
So you're doing underwriting on new construction development deals?
So I'm doing underwriting on everything. So we kind of have a weird organizational structure where the title's like investment or financial analyst. It's everything from FP&A to asset management to capital markets to developments to acquisitions. Anything with finances behind it, I'm part of it.
How many on that team?
4. We have 2 VPs, 2 analysts.
So you're really, when I put that, I mean, from what I'm hearing you say, that's like exactly what I'm doing, just on a much smaller scale, right? Like,
yeah,
we have new construction development stuff that's in the pipeline. We have existing assets. We have investments both GP, co-GP, LP investments. And it's like looking at the operators and the asset management piece. I do some asset management for my family's business, which is a kind of a weird thing. They kind of sit over there, like, over in the corner, but they're my investors. and so we do, like, we help with their reserves and I did the refinance work for them and do their asset management, do their their reserve requests. I do some investment reporting for them. So, I mean, is that the kind of stuff you're doing now?
Yeah. So part of that email that I was sorry, a little busy today, as we actually are closing on one of our refis right now of one of our hotel properties. So yeah,
Okay.
part of that where it's investor reporting to the Stark family, which is kind of like their base capital. But they also start moving towards outside money, a lot of friends, family, and then recently a couple institutional groups. So helping put together some numbers for them, like distributions on a quarterly basis, or putting together some asset plans that's basically high level numbers of where we think the budgets are, what our budget to variance, high level things like loan abstracts, equity abstracts, org charts, some market research for existing properties that kind of get updated on a monthly or quarterly basis. But yeah, then predominantly a lot of also acquisitions and development underwriting and that market research that goes with that.
So when you were at Marcus and Millichap, were you doing were you underwriting? Oh, that was retail.
Yeah.
How would you say your experience in multifamily underwriting is?
I would say that's probably my strength. All of our acquisitions and developments at this point are more geared towards multifamily. So at Stark, it's been my responsibility to completely build basically our multifamily acquisitions and development templates from market research and underwriting, since they were predominantly mixed use or retail only. So pretty much all of my experience at Stark has been geared on the acquisitions development side towards that. Not to say I don't have like the Argus and Excel skills for retail, but it's been 99% multifamily on the new side.
What the underwriting software you're using today? Tell me a little bit about what you're working on. What are you using? Argus at Stark? We
use Argus for our asset management. We primarily use Excel for our new multifamily if we're looking at retail. So for example, we have a partner that wants to recap out of some of their other properties with us. They would send us their Argus files, and from there I'd manipulate it and then do the modeling in that. But for multifamily, it's traditionally been Excel for us.
Okay. Yeah, I mean, I have a subscription to RedIQ, but I don't have the time, and I don't get the reps, so I'm not good at it. Yeah. Like, I'm looking for someone to, take charge of the underwriting, right? And it sounds like what you're doing now, like, right? Like looking at, I can take a quick peek at something and be like, okay, yeah, let's, but I'd say, hey, Doug, you got to do deep dive on this. Tell me what to do here.
Mm-hmm. Yeah. So right now, the way we have our structured for acquisitions and development is my boss will just send me just a high level of site map of where the property is and then say, go for it. So then from there, I'm doing the market research, trying to find comps on the rents, I'll talk to brokers. I'll go and do a site visit, try and see, what are operating expenses looking like, ballpark, whether it's other deals in the market that I can get my hands on to see what their underwriting is looking like. Or we have an operations person in-house that they're not great on markets they don't know, but they can give us an idea of, what we're looking at our current portfolio. But then using that, talking to our debt capital markets guy, going out, seeing what he's seeing in the, the spreads on loans and all that, trying to compile all that information, putting into the models, doing all this and that, and then basically doing a rundown with my current boss about here's what I think, here's the assumptions I made, here's what we're looking at. And so from there, we might spend 10, 15, 30 minutes, whatever it is, kind of fine tuning those assumptions And then once we have a basically gauge on that assumptions, send it out to investment committee and do that. But most of the grunt work, I'd say, on the underwriting side is done by me at Stark.
So on this refi you're doing today, like what's your role in that? Are you preparing, are you bringing the guarantor docs and all the returns and that whole process all the way through? Do you see that all the way to the end, or what's your role in that?
So in that, it's a little front-ended. So when we're looking at a bunch of quotes and term sheets from either banks that directly or from brokers, I'll go in and run a bunch of sensitivity analysis on where we need them to be. Are they even close? So in this case, are we going to have a capital call of too much money? What are we looking at, on the 5-year, 10-year projections based off of our budgets and cash flows? So a lot of the front end work. Then I pass it off on, all right, and give more yes or no to our debt capital markets guy.
Okay.
And then from there, he'll go in and he'll talk, and they do negotiations with the lawyers. And then basically anytime they have a request, like rent rolls, T12s, whatever it is, I compile that information for them. But outside of the initial sensitivity analysis and then the occasional, grabbing information, I'm pretty hands off on that process right now.
Okay. Do you ever get involved in like going out and coordinating DD on an acquisition, or do you have ops guys that do that, or how's that work?
So during the process, I guess I'll just probably walk you through it a little bit easier that way. It would be, I'm contacting the brokers and the sellers. And then from there, once we get to like a PSA type, they just kind of send all the information that they currently have. And then from there, I'll dig through, find what's pertinent, send that to our CFO and our accounting team to kind of go through the financials with them, make sure everything checks out. Then I'll work with our legal team and make sure that nothing's, there's no easements or anything ridiculous that we might be on the hook for. That's more of coordinating with them, not necessarily doing the grunt work myself with them, if that makes sense.
Yeah.
And that'll be the point of contact with the seller or the buyer in disposition cases to say what we need extra if they have it, or things like that.
Cool. That's good stuff. Well, why don't I pause for a second? Do you have any questions? Do you have questions for me? I know I've been talking about you a bunch, but let me know if I can answer anything about me.
Yeah. So what kind of deals have you guys been working on? I saw that there's the LPGP and some construction, but what are the markets you guys trying to break into? Like, how are you guys capitalizing it most of the time, or things like that?
Yeah. So it's real weird. Not real weird. I mean, you're kind of in a little family office. It's starting to feel like a small single family office right now. That's sort of where we're going, I feel like. And so, we're transitioning from, I have a brother who's 60, I'm 53, and a sister who's 50, and parents that are in their 80s, right? So, as we get a little bit older, we've been very active real estate folks. And so, I run my own property management company, 400 units, intentionally very small, in Dayton, Ohio. And I could probably be a lot bigger, but I want to make sure that I do the right deals. And so, we've been heavily invested with a guy in Texas, and we've been co-GPs on a lot of stuff. And so on the guarantor side, there's 6 of us down there that usually sign. And as we've gotten bigger, our deal size has gotten, we did the last 3 deals we did down there, 150 million, 750 unit Class A deals. Like, that was a 3-pack with pref equity. That's probably not a good idea today, right? Like, yeah. It's crazy. So, does that continue? I don't know. That was the biggest deal size that we did. To be honest, I don't know exactly. I want to make sure that I do the right deals and not be a deal whore and go do bad deals. So it's crazy. I started off 22 saying, I'm going to grow this big property management company, blah, blah, blah. And we all know last year was not that, right? It was crazy. But by right now, what I've really been working on is the family owns all this land on the near east side of Columbus. And so I've been acquiring land to do new construction development. Now, if we get them off the ground, I don't know, but that's where I need a person like you to help me underwrite these things. And, a couple of them are in opportunity zones, like it's structuring them the right way and going out and finding, and, we might not get them built, but they're going to all be teed up. And do we sell them? Do we develop them? I don't know yet. But it's the last few months have been, okay, I'm not acquiring new value add multifamily. It's what can we do today to drive value? And right now it seems to be entitling land and getting it teed up for development. At the same time, I don't know. We're trying to make smart decisions and not do bad deals. So I don't know that growing a huge property management business is the way to go. It's more looking for the right investments and making the smart decisions. And protecting the capital, right? Like we don't want to make bad decisions, because when I talk about, I've got my folks, I've got my brother and sister and I, and so collectively we've got a decent sized amount of assets under management, and then I've got my kids and my brother and sister's kids who are the next gen coming up, and I don't necessarily want to work with them, but they're going to be our LP and our people that we need to report to, right? And we've got to be good stewards of the money in the right way. And so, to be honest, I think that there's probably some we have good geographic diversification. We've got some student housing investment on the Ohio State campus with a family that, frankly, it's the bonds in the portfolio. And maybe I might want to exit that because it's not great returns, but maybe I shouldn't because it's good, it's safe. So I see more investment in other people and building those relationships with other people. But at the same time, I'm committed to 10 years of high growth. I just need to make sure that I go in the right direction and don't make bad decisions. And that's where a guy like yourself to say, okay, hey, let's look at this. And maybe, if you have experience in another field, then, it's smart for me to listen to you to say, hey, I know this, let's go look at this. This could be a good opportunity. So I'm open to making good decisions and growing in a responsible manner. That's really what it is. And so, and so, we're a really small shop here, right? But pretty strong base, and I use a fractional CFO. I have a full-time controller. I usually run some interns. I like to mentor young gentlemen and whoever. I've got so it's funny. I've got my college friends. I have their sons that come and intern for me, right? Like, because I like working with and teaching what I do, and that's why I say I think it's important in this role to be here, because I'll walk out I walk out in the other room and we have a jam session and just talk about deals and what do we want to do. So
that makes sense. Yeah.
I also run a captive insurance company that my brother and sister and I are the beneficiaries of. So we do a lot of high level tax strategy here, and planning and looking at, we've got our Texas investments. A lot of 1031s have huge deferred gains we have to be aware of. Like running those analysis. So I know that was a lot.
It sounds very similar to what we're doing here, where it started out with, our CEO's parents, starting this business, and then all of his brothers and sisters, and now their kids, now that they're in their, 50s and late 40s, that very similar is try and keep as much money as sheltered as possible through 1031s. And then whether that's new investments, we've even looked at like gas stations across like the Southeast, trying to hide money, cash, anything that cash flows, and to avoid capital gains tax kind of thing. So fully aware of the kind of strategy of we want to do as many deals as possible, but at the same time they have to be the right deals. Like we don't want to lose money, especially with the family's money. It's not like a Blackstone where it's millions of people's money that you're not dealing with, not your own kind of thing.
Right. And so the other part of this, and it sounds like you're doing that, is that reporting piece. Like I find that my partners that I invest in don't do the reporting level that I want to have. And so it's talking with the folks that we've invested in and saying, I literally log into their software and look at their numbers and run reports. I have a scenario right now, my partner in Texas, I'm not happy with the reporting. And so, I need more reporting to make my family feel comfortable. And frankly, the other partners in the deal want the reporting, and my partner's not willing to do it. So we have to take that on and do that here. So
that makes sense. Especially
and
for us, we have the Starks. They are spread all over the country and globally. There's some in Israel right now. So they're a very similar boat where they want to trust us, but at the same time, for their own purposes and sanity, they need to see that like spelled out for them that they're making X, Y, Z. Here's the portfolio performance and all that. So we're in the same boat.
cool. Do you have any, do you have any investments of yourself, or do you invest alongside the family, or, what are your goals on that?
Yeah. So with my parents, they have some real estate, predominantly just, some single tenant net lease, which they bought and sold. My mom owned their own company for a long time, and they had all this cash sitting from when they sold it right before COVID. So they were kind of using me as their own personal underwriter to try and find some deals to invest in.
Yeah.
So similar, I also have some friends in college that their parents owned like their own medical practices, and they're getting up there in age, so they want to retire, except they get bored because they're so used to running medical practices that they want to start investing in real estate. And so my buddy from college was also trying to do the same thing I'm doing, which is invest in real estate. And so he got his real estate license to go out and broker the deals himself, and they come to me for underwriting, and I get a little bit of equity in those deals, kind of thing. So
cool.
Yeah,
that's definitely something like in order for me to grow, I've got to go out to I have to sort of shift a little bit to a syndication model and start charging some fees, especially to pay for a gentleman like yourself. And so we're sort of shifting from friends and family model to a little bit more of a syndication model. And so, those opportunities are when I say, there is opportunity to invest in deals and, align interests there as well. So.
Yeah, I mean, that sounds great. At Stark, we have a model where you can invest in the deals after a certain investing period. So typically after like 3 to 5 years, then they say go for it for select departments. So I haven't really hit that benchmark yet. Would love to, though. We've had some great deals since I've been here, but some institutional quality deals, like we have one that's currently in development right now in Florida that I think is going to kill it. It's in a great location, and some of the pre-leasing we've already seen already is hundreds of dollars above our pro forma rents.
Which I'm looking on the site right now. Which deal is that, or is it even on here?
I'm not sure if it's on there, but it's called Westshire Village. It might be on like coming soon, or I don't even know if it's at that point yet.
Yeah, I see it here. I see it.
Yeah, we haven't even delivered one unit yet, but we already have, I think, 20 pre-leased apartments, and they're all well over $100 per month above our pro forma. And it's been crazy how fast that's leasing up.
That's awesome. That's awesome. Okay, what else can I answer about myself?
So it sounds like it's a family business where you guys have always been in real estate. So how'd that kind of start?
Yeah, great question. So, my parents were doing what we've always been in scattered site multifamily my whole life. So, so I grew up working and owner operators, like the old school 1970s, family business. And that's, so I grew up around that and always knew that I wanted to be in real estate, and just didn't know where I really fit in. Went to Ohio State, said I'm going to get a real estate degree. And I got a real estate finance degree from the College of Business there, and went to work for a big developer in the ski resort development business. So I was doing mixed use base village development for 5 years at Snowshoe, West Virginia. So was in charge of their commercial retail program, built their employee housing, did wayfinding around the resort. And that was a publicly traded company. So I got that big kind of corporate level experience, which was good. And then had my, Peak 10. I'm a big skier. That's where the name comes from. Big mountain person. That's if you look on my website, I've made some investments in Utah that are around ski resorts, which is, my personal goal is to be, developing, my personal goal is to be developing a multifamily building or site within 5 years in some type of resort setting.
Yeah.
Could be in a town. That's like my personal goal. So did that, Peak 10. I sort of started that in 2004 on my own and ran that for about 5 years. And then the Great Recession hit. Wasn't a lot of work. And then finally decided I'm going to go back to the family business and got a CPM through IREM. So I've got a CPM designation. So I really brought a lot of technology to the family business, and we had massive growth while I was over there in terms of not so much in the family's portfolio, but investments in other people's deals. And the investments in Texas started in 2012, and we probably flipped 5,000 units in 10 years down there, and it's been awesome, man. It's been, our value add strategy was like, how can we execute faster? Like we would buy stuff, and there's sometimes we would get so far along that we'd sell it and have to wait to close until we got to day 366. Like it was the fat and that business sort of dried up a little bit, the value add with interest rates. So that's where the Class A assets, we almost sold the whole entire portfolio down there. But I left the family business in 2018 just because it was too taxing on my relationship with the rest of the family. And I quickly realized that family business model, that structure, I was not going to be able to make the money that I wanted to make. And so, not money that I make, like their expenses are so out of whack. Like my 400 units in Dayton makes more money than their 900 units here. So in order to do what I wanted to do, I couldn't have their cost structure. So that's why I was building this business alongside the family business. And so really that is now, the family business is just a small part of the bigger picture. So that's how I got to doing this. And, that the family business is just sort of stuck. And so I can be a lot more flexible, and my family's my investors. And so my brother and sister, my guarantors are great when I need them. And so that's kind of how I got to where I'm at today.
Cool. So are you looking then to do a lot more developments in the future, or more of the value add, or even like more of an LP role in certain cases? Like which way do you see your company going?
So, I think I'd like to do some more value add. That's really what I know. I know how to do that, but the market conditions aren't for that today. So that sort of paused a little bit. I mean, I'm looking at deals every single day, but nothing's, I'm having a hard time getting them to make sense and making sure the debt's right. And so by default, like I know I can make some money in this development space by getting all this stuff entitled and ready to go. And so that's where the growth is today. I mean, I continue to see I continue to see us making investments in other people's deals, but I like to be active. So I plan to grow and be an active GP and do more development. I just need to get better at it. I think that I'm new. That's why I JV'd these last two deals, but I've got a great gentleman who's helping me on the development side. He's consultant, and we're going to trade his fee for equity in the deals. And so it's modeling that structure to make sure his interest is aligned with mine. And we've been working together like 90 days. He's taken my development efforts in 90 days further than I could take. I've been able to take him in 2 years. So right now, like it's like off to the races. I've got a 1 acre site I'm negotiating right now to buy that could be 100 and, like I'd say, hey, Doug, do me a perform on this. I think it's 120 units. If we do podium parking, what do we do here? It's in an opportunity zone. How do we structure this? How do we make it all work? Like so I think there's growth right there. And, like, okay, what if we do? Should we put commercial in here? What do we, how's that work? What can we get on the commercial side? Like, so your retail commercial expertise is very intriguing to me.
So then how is the process going for like entitlements? Is it only yourself doing it? Do you have anyone else helping like the legal side of that, or especially working with municipalities? And I know some of that entitlement work can be a bit of a pain in the ass, but
No, I mean, that's why I align myself with this other gentleman, because he's going to lead that whole thing. He's the guy thinking about it every single day. He's the jockey on the horse. I'm just riding along, man. He's the one going, okay, lawyer, do this, architect, do that. Like, he's really guiding. I'm just sitting here, and I'm being out. I need to stay at the high level, getting the land and the relationships, and I'm going to let him run with that stuff.
yeah,
But I really need, I really need a person who can look at the deals and tell me, hey, this is going to make sense, not going to make sense.
got it. So then how have you been sourcing these deals and like also sourcing the debt part of these deals? Like outside brokers or internal relationships?
So, so, um, I've got a guy who is, looking, he's acting as an acquisitions guy. So in exchange for being part of the GP, he'll get cut in for finding the deals. So he's out there right now, looking at every deal. We have a weekly call. So that's from the broker side. Um, and really, I mean, a lot of stuff I buy, principal to principal. I mean, in the Texas markets, what we've done to grow there is developed a relationship with, they were JLL brokers, and they're in all of our Texas deals down there. So like, through those guys, we get the last look at so much stuff. Like, when even if they'll take it to market, but they'll call us the last second and say, hey, if you do this, then you can get the deal. And sometimes we do it, sometimes we don't. So just those broker relationships, um, so I just try not to go head to head with, I know a lot of the players here in town locally. So, the challenge is right now, like, as an example, I was looking at a $40 million deal, and that's a little bit on the big side for me. Right. So you know, how that's a little bit too big for me to bite off. Right. So I've got to figure out how to structure it. And it's probably, okay, who can I get to slot into that place if I'm the manager, because I would manage it. Who can I get to slot in to be a partner? Okay, let's go through the short list and let's start talking to them. So really, just those relationships. I have friends. It's crazy. Like, people I see in Texas are coming in the Ohio market, and it's like, hey, we don't have any management. Would you be interested? I said, well, I need to own percentage of the deal. So, I'm trying to build those kind of relationships, because Columbus is a hot market. Cincinnati's hot. Guys are coming in chasing yield. So how can I leverage my connections to those? I mean, to those guys. So really, it's just a hodgepodge of trying to find deals. But it's really, to me, I bring couple high net worth guarantors, my brother and sister, myself. What does the other people need? How can we all win in this?
Yeah, that makes sense. So then do you have more of a regional like relationship bank then to get some of these like debt deals done? I know the spreads on some of the big boys can be a little like, aggressive at times.
Yeah, I mean, I sort of, on this, on the small stuff, I've got great banking relationships, probably up to the $10 million for the regional, local, not regional, I'll call them large communities, and maybe they participate out. I know a lot of the local people here around Central Ohio. So, on the national side, like, I've got some good relationships with. I did 3 deals with JLL, and they sourced the debt. And my guy moved over to Bellwether. He's now at Bellwether. So, I've got a great relationship there for Fannie Freddie. I did the development deal in Fort Wayne, that JV, that was with a life co out of Galveston. So Walker and Dunlop, local office here, AJ Mangan there, helped me source and build that relationship with that life co. So I've got that I haven't utilized that, but to be honest, if I'm going to go to the next level, I've got to align myself with a relationship that has much deeper pockets, so I can do these. Like, I realize I've got to build that relationship. Just like I said, that $45 million deal, little bit big for me. Maybe the old way in my family would be we need to take it down ourselves. No, that's not the new way. Okay, let's find another, whether it's a family office or someone else to align ourselves with. That's the next step. I've got to build those relationships to the deeper pockets, or maybe that equity partner or whoever. That's the next level. That's the next step.
So then you're looking to just strictly do syndications, or would you think about doing funds? Or, I know the group Huber Equity, actually down in Columbus, that I've talked to in the last couple months, a little bit deeper pockets, but same kind of thing, where it started out a little smaller, but they've started to raise more and more funds. Didn't know if looking to syndicate on a deal by deal basis, partner with other family offices, kind of thing, or how you saw it.
I mean, yeah, I know those guys at Huber Equity. I've met with them a couple times, and really nice guys, like those guys. I mean, I'd love to have a relationship with some deeper pockets, but I don't know that. I mean, it's really case by case basis. I think I have to go to a little bit more of a syndication model just to support the team that I need to do this. I don't want to be a fee guy, like fee the hell out of my investors, but because they're my kids, they're my parents, they're my friends. Like, I don't want to be 3% acquisition fee guy. I don't want to be 3% disposition. Like, it's not about fees. So, but I have to have enough to support the team to do that. Like, we do all the personal financial statements for my brother and sister, my mother and father. Like, they pay me a fee for that, and I pay into the fund to do that. So I don't know whether I go to a funds of fund model or how I do that. I don't know that. I don't know yet. I got to figure that out.
So on the OpEx side, when you model that, do you take into account like payroll? So I know for, at least at Stark, when we look at any of our deals, we kind of bake in salaries into into our OpEx. So it's charged to the property level and not necessarily on a fee basis. So for instance, if we have legal fees on one of our properties, it's Crocker Park that we own. I'm not sure if you're aware too much of the Cleveland area, but it's a big mixed use development. We might charge $1 million of legal fees. All that internal, and that goes to paying the salaries of our legal team, kind of thing.
Yeah, I mean, I'm sort of new to the fee structure, and so I've got to figure that out a little bit more. And I actually got to run here in about a minute, but those are great questions that I don't know the proper way to do it. I just know I don't want to be feeing my family to death. Yeah. And so I need to find a comfortable mix there. I do try to push stuff out to the properties and make sure that it's a reasonable amount. A 2% asset management fee is reasonable, right? Like, let's find the reasonable amount that we can charge that everyone's happy with. Because I didn't start out charging those fees, so it's got to be. But yeah, I mean, we try to push it out in a responsible manner and make sure it's the right. I don't want to get too top heavy, right? Like, that's not what I want to be. Well, I got to get going here. I mean, I really enjoyed the conversation. I'd love to talk with you again. I think you've got a ton of great qualities, and we speak the same language, and I think you're coming from an area that's really you're doing what I think I need. So.
Yep, sounds great. Just let me know whenever you want to talk again. So.
Yeah, well, I appreciate it, Doug, and I'll definitely set something up, and we'll talk again for sure. So. Have a great weekend, man.
Yep. Thanks. You too, man. Thanks.
Think about your questions and let me know.
All right. Sounds good. Thanks for the time.
Thanks, man.